Today we shall discuss about higher financing agency. Financial institutions, basically let us think about the banks. You have seen commercial banks. Under commercial banks there are different type commercial banks. State Bank of India, United Bank of India. Then there are 20 nationalized banks along with the private banks. Then you have cooperative banks, regional rural banks, Gramin Vikas banks. Now you just tell me before we start this lecture, these financial institutions, banks, cooperatives, regional rural banks, are they under somebody's control or they function independently or without any control for somebody? What is your view? Do they do banking activities by themselves without the control of anything, any financial institutions, or they are under the control of some financial institutions? These financial institutions, be it cooperative bank, be it regional rural bank, be it commercial bank, these are under somebody's direct control. And this control mechanism in our national scenario is done by which particular institution? RBI, Reserve Bank of India. Because Reserve Bank of India frames different policies relating to the financial institutions, relating to the economy, and this particular institution controls these different financial institutions. Like in the international scenario, World Bank. So our today's discussion is these two institutions, World Bank as well as the Reserve Bank of India. Now, if we look into the history of formation of this World Bank, now we shall go back to 1930, because at that time the entire world a Great Depression. Do you have any idea about what is depression? So depression is a phase in the business cycle. That means the economy of a country never move in a steady manner. There are ups and downs. And depression is a phase in which all the economic activities are at the lowest level. And the economic indicators or economic activities, if we measure in terms of production, income, savings, investment, employment, all these activities are at the lowest level. In 1930, there was a Great Depression around the world, and finally, the economies suffered. Economies of different countries suffered. And at that time, there was a thinking for an organization to create a system of exchange rate stability. Because when the economy was at the low level, then its currency faced a crisis. There was crisis in the international trade. The value of the currency came down and it was uncertain in the international scenario. And at that time, since the country's economy were poor, so the one country started to cheat other countries in terms of international trade. Then there was Second World War in 1939. So the countries were also affected by World War, Second World War, and the economies of different countries were totally affected. So at that time, there was a need for reconstruction of these well-developed nations and also the poor developed nations. In 1940, a proposal came from two great economists, one Dexter White from US and John Keynes from UK. they wanted to establish the value of its currency because the economies collapsed. So they wanted to establish the value of its currency, and they wanted to eliminate the restrictions and certain practices on international trade. So then came in 1944 the Bretton Woods Conference. It was held in Bretton Woods, New Hampshire, USA. It was attended by 44 nations, and the proceedings were mostly dominated by two great countries of the world, USA and UK. And the outcome of this Bretton Woods Conference was the development of International Monetary Fund, establishment of International Monetary Fund, and the World Bank. And these two institutions had their headquarters at Washington DC. Both these two organizations, IMF and the World Bank, had their headquarters at Washington DC. Then one more interesting fact is also there regarding these two institutions. The head of these two institutions incidentally belonged to one particular country. Anybody knows about this? IMF. Head of IMF. I don't want the name. You may forget this. But IMF is always led by an American. Traditionally, it is led by an American, and the World Bank, it is traditionally headed by an European. Now, coming to the World Bank, the official name of World Bank is the International Bank for Reconstruction and Development, IBRD. IBRD. And it is a specialized agency of UN, and it is owned by the member countries. And how many member countries are there? Till today, it is 188. Now, this 188 member countries, they form this World Bank. They become shareholders by contributing capital to this World Bank, and finally this bank does different activities. Now, what are the main activities? That main focus of this bank, the World Bank, is reducing poverty by promoting sustainable economic development. This bank was formed after the Second World War in 1945. At that time, the entire economies of different countries were in crisis. Then these economies need restructuring and development. And at that time, possibly you know, the countries were divided into two blocks: developed countries and underdeveloped countries. And nowadays we do not use the nomenclature underdeveloped, rather we say developing countries, because over the years, due to different development activities, these underdeveloped countries are now developing gradually. So we have underdeveloped and the developed countries. Now, after the World War, there was great restructuring of these economies, and finally it was expected that all the countries, be it developed, be it developing or underdeveloped countries, develop simultaneously. And this development is sustained over the years. That means it is developed for 4-5 years, and then finally no development came. It is not expected in that line. Rather, it is expected that gradually all these countries are progressing, economies becoming stable year after the year. Then it provides loan. World Bank provides loan. It provides guarantees and related technical assistance for projects and programs in the developing member countries. Whenever a member country wants some finance to finance some of its development projects, like say construction of roads, agricultural sector, infrastructural sector, schools, hospitals, etc., then this country, member country, can take loan from the World Bank. And the amount of loan sanctioned to its member country is determined by the amount of contribution that member country makes to the World Bank. Then it also acts as a guarantor. The World Bank acts as a guarantor to the member countries. When a particular member country wants to take a loan from some other financial institutions, because World Bank is not the only one institution in the world who provides the loan to a particular country. There are certain other banks like International Monetary Fund. Then similar other financial institutions, or a certain country may also offer loan to some other countries. Now, when a loan is requested, then the receiver or the borrower, he has to provide certain securities. Even if when you take a housing loan, you'll have to give certain mortgage of the landed property. Suppose a personal loan is taken from bank or applied to a particular bank, certain securities in the form of LIC certificates or such other saving certificates are to be deposited in the bank. That is a kind of security. Or you may ask someone, some of your friend, to act as a guarantor on your behalf. That means if you are not being able to repay the loan, that guarantor will assure the bank that he will repay the loan. So similarly, the World Bank acts as a guarantor to a particular country, member country. It must be a member country, for securing loan from other financial institutions. Then it also helps in developing projects and programs for execution or for implementation. Then its main objective is not to earn profit. IDBI, RBRT, International Bank for Reconstruction and Development, although it charges some nominal rate of interest and also processing fee for a loan provided to a member country, but its main intention is not to earn profit. But it charges interest rate in such a way that it earns sizable amount of income for its sustainability, because it has to meet certain its operational cost. So its main objective is not to earn maximized profit, but to earn adequate net income to ensure its financial strength and to sustain development activities. Then what are the other activities apart from this? There are certain other specific activities done by the World Bank. First is the consultation. It acts as a consultancy, and it provides consultancy service to the member countries in terms of utilizing a loan, or for obtaining a loan, or for taking up different development activities. And for consultancy, the World Bank may charge a nominal rate of interest. Then research and training. The executives of a member country are usually engaged in preparing different policies, programs for development of the economy. Now, for developing different policies and programs in a country, these executives must have certain experiences. Where from they get the experiences? The World Bank trains them. The World Bank trains them in developing different policy-related projects. And for them also, the World Bank may charge a nominal charge. So this is what we call research and training. The world executives may go to the World Bank, or the World Bank executives come to a particular country, train its executives on policy matters. Then comes trust fund administration. The World Bank acts as a trustee for a fund offered by certain other countries. Suppose I give you a small example. a particular country is interested to invest certain amount of money in another country. Then while investing this amount, proper monitoring will be required. Instead of this entire monitoring done by that particular country, donor country, they may approach the World Bank to utilize this particular fund for the purpose for which it is donated. So the World Bank acts as a trustee to this donated fund by one particular country, and the entire fund is utilized for the purpose for which it is donated. So this is called trust fund administration, and this trust fund is not included in the assets of the World Bank. It is maintained separately, and the entire fund is utilized for the purpose for which it is donated on behalf of the donor country. Then comes investment management. The World Bank also provides investment management service to an external institution for a fee. Suppose a particular country floats a tender. As for example, metro rail. We do not have technical expertise for construction of world-class metro rail system. Suppose that Japan has got the entire expertise for this, or some other countries in the world may have expertise for this. So our country has floated tenders, and finally Japan gets this tender for metro rail system. Let it be, suppose at the Guwahati. Our Chief Minister is talking about the metro rail recently. Is it not? Recently in the newspaper it has come that in Guwahati, in the coming years, we will be experiencing metro rail system. And suppose, let us hope that the Japan is implementing this. That means Japan is investing certain amount of money for erection of metro rail system in our state. Then in this investment by Japan in another country, in the entire investment, World Bank may provide the assistance on behalf of Japan. World Bank may also provide certain other technical service or certain administrative service or the service whatever the Japan is required for investment of the Japanese yen or Japanese amount on Indian scenario. So this is what investment management service to an external institution for fee. And the World Bank charges certain fees for this kind of services. Then comes financial strength, where from the money comes to the World Bank. As I told you before, that how many member countries are there in the World Bank right now? 188. Now, this 188 member countries, they contribute to the World Bank according to the quota fixed by them, fixed by the World Bank. They contribute share capital to the World Bank according to the quota fixed for them. And this becomes the share capital of the World Bank for different activities, to perform different activities. Then it also offers loan to different member countries, and on the loan the World Bank charges nominal rate of interest, and that also becomes the principal asset of the World Bank. That means